Welcome to Markets Now. I'm Michelle Rook with Oliver Sloup Blue Line Futures. Livestock leaning to the plus side on Friday with the grain trade mix. Wheat to the plus side, corn and soybeans lower. And in fact, we made some more new contract lows again in new crop corn and soybeans. Oliver, I know we're trying to price in some expectations for bigger yields in the Monday WASDE. What do you think the market's trading right now?
Well, the average analyst estimate comes in right around 182.1 for corn and 52.6 for soybeans, and those are some pretty lofty numbers to meet. And it kind of makes me think and maybe question how high is the bar set, and is it set too high? I guess to be determined, right? I think, in years prior, it's been interesting to note that there's been more weather concern in isolated areas where there were some more uncertainties around variability of the crop. But this year, it seems like there's a lot of good crop out there. So instead of having the bar set too low and it's easy to overcome those expectations, are the expectations so high that it's tough to meet those and exceed them, where it leaves room for disappointment and potentially that would be able to help price? So it'll be interesting to see what the USDA says. And then, shortly after that, the Pro Farmer Crop Tour kicks off. I'll be on the eastern leg. I know you'll be on the western leg. So it'll be interesting to get some boots on the ground and kind of see what's out there as well.
And as far as the WASDE, do you think we're going to see some lower acreage? Is that something that could offset the higher yields at all?
Yeah, I think that's certainly something that could offset the yield a little bit. I don't know that there's high expectations for any major changes there. At least I'm not expecting any major changes there. I think the big thing that we're going to be looking at is those yield numbers. Those are the headline numbers that a lot of traders and algos are going to be keeping a very close eye on. So it'll be interesting to see what all the other data comes out as well, like ending stocks, old crop and new crop. Those are going to be some important data points, but that yield number is really going to be front and center, I think, for a lot of folks out there. Can we meet those expectations or not, to be determined?
How concerning was it as well for you in soybeans that export news was pretty good on Thursday and Friday, and yet we failed to really rally the market on it at all?
Yeah, it was really disappointing. On Thursday morning, we had the weekly export sales report, and it was so for old crop, but for new crop, it was actually really good. And the fact that we weren't able to really gain any ground on the back of that report was a bit of a caution flag. And we saw on Friday morning a string of flash sales, and we weren't really able to sustain any real momentum there either, and finish right near that psychologically significant $10 level for November soybeans. So if you can't rally the market on good news, that's always a caution flag, in my opinion, and what we often refer to as a fundamental rejection. And it just goes to the point that this market is very heavy. And I think there's a lot of concerns out there of a big crop coming down the pipeline and just lackluster demand. So although we did get some good demand numbers, we need to see more of that on a consistent basis. 1 week is not a trend. If we can start to see those numbers trend in the right direction, maybe that's what could get this market moving north again.
Yeah. So talk about some of the technicals here. Is it a given that November beans are going to take out the $10 level? And then what about corn? Because we did close below $4 this week.
Yeah, from a technician standpoint, it's really tough to figure out where significant and meaningful technical support is once you get into uncharted territory and contract lows. The way I look at it, the charts is it's a roadmap of previous interaction between buyers and sellers. And when you're at new contract lows, you don't have those price points, previously important price points to go off where the trade took place. And so it becomes more of a momentum thing. You can look at continuous charts and extensions. And if you were to do that, you could probably find some support near that 380, 385 for December corn. That's been something that we've been kind of putting out there as a potential next level of support. And for soybeans, that $10 level is psychologically significant. I mean, we're right there. I would be shocked if the market didn't take a peek below there at the very least. What is below there, I'm a little bit nervous about.
We did see a slight bounce on Friday. So, is that market starting to try to carve out a bottom? Or are these some of these global production concerns that we're trying to price in?
Yeah, you can't say this very often, it seems, but wheat has actually been a bright spot for the last week. And it looks on the chart like it has been starting to carve out a little bit of a low. I know that there's been some potential frost concerns in Argentina, potential escalation in Ukraine, and some other, potential crop concerns in other areas of the world. And that's been able to help the wheat market rally back towards some big technical levels. Looking at that December Chicago contract, 575 to 580, that's been a big inflection point for the market. Tested it Friday morning, but weren't able to get out above there on a closing basis. If we're able to get out above there, potentially that spurs a little bit more of a technical momentum trade to the upside. Funds right now positioned there about 78,000 contracts short. Now, corn and soybeans are darn near a record net short. 78,000 contracts to the short side, though, in the wheat market really isn't all that uncommon. And if you think back as recent as last November, they were as short as 120,000 contracts. So if we can't get these bullish narratives and headlines to really come to light in this wheat market, my concern is that we're not able to get out above technical resistance. Those crop problems work themselves out, and funds maybe look to sell there. So the next couple of weeks will be very interesting for the wheat market one way or another.
Well, really, in all of these grains, we don't have the big bullish catalyst yet to get the funds out of these big shorts, do we?
Well, that's just it. The funds are very comfortable in their net short position. It looked like, maybe over the last week or so that a risk off trade in the outside markets may jostle some money around and maybe spur some money movement and short covering. That happened for like a day, and then the stock markets rallied right back, and it was back to kind of putting things in cruise control, so to speak, for these managed money positions that, like you said, they just don't have any reason to cover their short position today. Why do it today when they can wait and see what tomorrow brings and next week brings?
Yeah, I thought maybe some exiting of longs in the stock market might give them some impetus, but like you say, that didn't last long. Cattle, on the other hand, did react to the pullback in the stock market. We had a nice relief rally today. Do you think we can build on that or not?
I've been pretty pessimistic on the live cattle market and feeder cattle market really since the middle of July. There's just been a number of things that have come to light with a lot of headline risk out there, from bird flu to the election to geopolitical risks to economic risks, into what is seasonally a weak time of the year, that being August. And here we are. You get one shoe to drop and you've got a mad rush to the exits. Now, it was nice to see a recovery today, Friday, and see some of that ground gained back. And I think potentially you could see the market work a little bit higher into next week's trade, so long as those outside markets continue to stabilize. But ultimately, I think this probably sets up for a sell opportunity, especially for those that need protection to the downside. So looking at that October live cattle contract, we've got our eye at 182.67. That was a 50% retracement, or basically just the middle of the range from the recent high to low. So if we get back up there, we'd be looking at extending some coverage for guys. And then I think you could probably do the same with a lot of those deferred contracts. There's been a lot of comparisons in the grain markets, specifically for corn against 2014. I think you could probably make a similar comparison for the cattle market compared to 2014, 2015, the last time we made those highs. The market drifted lower for many months after that, and I'm concerned that we might be entering into a time like that. So downside, if we get some more relief into next week's trade, I think it's going to be important to cover the downside.
Yeah, that is really a good comparison to the 14-15 cycle. Futures discount to cash, though, does make it a little difficult for these hedgers, doesn't it?
It really does, and it's been a battle, kind of wrapping your head around that. I know there's some other products out there like LRP that a lot of guys have been using. Our branch office in Nebraska, Ben Rand, does a lot of that, so he's a great tool for that. But there are some opportunities in the futures market, especially if you're looking at some of those deferred contracts. The futures market right now is telling us that things might not, stay as good or for as long as we want. So they're pricing in a little bit of concern, and I'm just concerned about the downside here. So again, despite the big gap and basis there, I think you use rallies as selling opportunities to help manage risk.
Right. Hogs ending mostly higher, but we've chopped back and forth there. So do you think we just do that for a while? Are we kind of range bound, or what's driving the market?
It is. Yeah, it's just been a whipsaw trade on Thursday and Friday. We thought 74 for that October contract was going to offer some pretty good support for the market on Thursday, and then we gapped below there, and then we were able to bounce back a little bit in Friday's trade. But it's just a lot of back and forth. Seasonally, we can start to see the market find its sea legs in the back half of August. So I wouldn't be surprised to see the market continue to chop around here in the next week or so. Then once we get in the back half of the month, maybe see this market work back to the upside. And the export data this week, was halfway decent, 34,600 metric tons. That was up 10% from the previous week and 24% from the prior 4-week average. So if we can get data like that on a weekly basis and get into a seasonally friendly time of year in the second half of the month, I think there could be some upside potential there.
Got to get that demand to kick in for sure. All right. Thanks so much, Oliver Sloup, Blue Line Futures. That is Markets Now.